Listen, you can say whatever you want about me or how I trade or how ICT trades, but you got to respect one thing and one thing only is when you take winning trades and price doesn't even come near your stop loss and it's almost like an 8-to-1 risk to reward. All your TPs get filled. You basically predicted price action. You called price action basically a day early. Have some respect to that because that goes a long way. Today, on Thursday, I will be honest, this was a little unexpected for the S&P 500, for the NASDAQ and ES. But hey, it is what it is, and we make the best out of it. This is going to be a very long video because we have a lot to cover. And the first things we're going to cover is some notes I have put up here. So there was some mistakes that I've done trading. Today, I most definitely overtraded. If you don't know what overtrading is, basically it's when you, let's say you have a strategy and your strategy is, appears here and there and you trade once, twice. Overtrading for me is trading more than 2 times. That might sound crazy to you, but trust me, when you're trading my model or the ICT 2022 buy and sell model, it doesn't happen every single day, especially 2 times a day. That means that there's 2 market structure shifts during the day. That's not something you want to see. That means it's just chopping around. Usually you just want to see one big one and then have a huge trend. You just want to catch the trend. And a big thing called revenge trading. Now, revenge trading is, let's say you get in a position, and I'll talk about options and how that kind of fucked me over. Revenge trading is when you get in a position and it's a lose. It's a loss. It's an L. Your emotions will get to you, and they'll say, okay, well, if you called it here and you lost, go short. Because basically, if you lost money going long, you'll make money going short. So you revenge trade. So you go short and you lose money because you're wrong about the direction. All it was a low retracement and your original idea was correct. You just got in at the wrong time. That's exactly what happened to me today. And believe it or not, I did this on real and demo, mostly demo. And the real money was actually, this was a funny story. The bias and the price action that I called yesterday was correct. But I got out because of my emotions. The price for my swing contract was nowhere near my stop loss. But mentally, I said to myself, if this comes down below this level, I'm closing, even though it was not even near my stop loss. And the reason for that is because I had a very small contract. And if you know anything about options, not saying that everyone should trade options, but if you know anything about options, especially small contracts, the moment that you're in drawdown, it is basically, you can already call it a loss. And the problem with that is if you're not trading 0 DTE, so the contract ends that day, the moment you bought it, you're basically going to get fucked. If you're in drawdown from anything above 0 DTE contracts, you're going to stay in drawdown for a very long time. And the longer you stay in drawdown, the worse it gets. So think of it like, I'm trying to paint a picture so it's easier for you to understand what I'm trying to talk about. It's almost like you take a sheet of paper and you dip it into water, okay? Once you dip it in the water, like just a tiny bit, you can see that the water starts to spread upwards on the paper. But at the very, very bottom, what happens? It starts to become loose. It starts to become fragile. It becomes mushy. And then at one point, it falls off, so it decays. So over time, if you just put the paper and you dip it in the water and you stay in the water, guess what happens? When you pull it out, half the paper's gone. In a way, this is how options work, and this is like very simplified. When your contract is in drawdown for an hour or two, or maybe overnight, and then the price does something like this, but you're in drawdown for down here, you're not gonna be in profit, because your contract has already lost half its value. So it needs this to gain half its value back to go break even, and another candle like this to be in profit. And if you had a 3-day option contract, that would not be possible. That's how they fuck you. That's why I said small contracts equals big losses, loses its value when it's in drawdown. The reason options is complicated is because it's not how big your option contract is, it's when you buy it. If you bought it at the very low, you'd be in profit because we never went into drawdown. But if you went here, you bought it at the close, you see how we went into drawdown here? This little wick down here, that means that price came down and traded down here, pre-market, but then it came back up. But you would be in drawdown here. And the longer you're in drawdown, the longer this price stays under your position, the bigger the loss, or the bigger the water spillage, right? I mean, the bigger the value is going to drop, and that's bad. So that's what happened, because smaller contracts don't tend to, go from 0 to 100 in a slap of a finger. They take time, and they take volume and volume and volume. That's why it's easier, in my opinion, to trade 0 DTE with high volume, with, $100 contract that moves fairly equally to the market, instead of buying a contract 5 days out for $30 that moves, 5 cents every 2 days, for example. So that's one of my mistakes. That's why I lost a lot of money. Getting emotional, that's one thing. Another thing is swing trading, even though I have no idea how. Yeah, I was in a swing position. If you recall, yesterday I talked about how I was in a call position for Monday. And as you can see, we would be in profit right now, wouldn't we? I bought it down here. Like, look, I have a line right here. I bought it down here. That's where I bought my call. And that's where price is right now. It closed above here. I would be in major profit. But why did I sell? Because it went down. Just see this wick? I was scared. I got emotional. I was scared it would come down even further. And I'll tell you why. And then the last thing, and this was probably the biggest thing for today, was using a low time frame PD array as a high time frame PD array. If you know anything about PD arrays, and I talked about this yesterday, a 30-minute fair value gap is not a high time frame PD array. But what do I need for my strategy to work? I need a high time frame PD array. Uh-oh. That doesn't work, does it? Okay. Let's go over it. First, let's go over to the Discord to see what I called out in the premium. As you can see, this was yesterday. I said all wicks show bullish order flow. You can see this was yesterday aftermarket for analysis. Weekend, this was the low that we made on SPX. We came super low, swept that fair value gap, came right back up, traded above the consequent encroachment, closed above. This was a 1 hour market structure shift waiting to be formed. As you can see, price starts to chop around, but as you can see, there's a bullish breaker that is here, that is formed. The bullish breaker is right here on this order block. It gets traded right through, so that's a bullish breaker. And there's also a 1 hour fair value gap that gets respected here. So all I was hoping for is for price to respect this fair value gap. Maybe not this breaker in particular, but this fair value gap itself get respected here. Didn't really care if it traded all the way down here. If it closed under, it would be disrespecting it. But if it closed anything in or out, it would be respecting it. So let's go ahead and go to the 1 hour and see what exactly would happen. Oh, would you look at that? It traded lower, but it closed in. Just saying. Just saying. 1 hour market structure shift, that high gets nicely swept. And we said aftermarket and pre-market target. So this was our pre-market target. As you can see, we closed above this pre-market at 5 a.m. So this was definitely pre-market. So basically Asian or London session. So this was nice to see. That was SPX. ES basically had the exact same thing on ES, targeted highs, market structure shift on the 4 hour. Same thing happened on ES. NQ, a little different. NQ was trading a little higher than usual. We had an order block, the fair value gap. Didn't quite fill that full fair value gap. I'm not even sure we went all the way down, but we did trade down with SPX. Had a nice bullish retracement. As you can see, we formed a balanced price range right here on the 2 hour, which we were respecting. Did not think this would hold up, but this is where we wanted price to close above, was this order block right here, and this would be the market structure shift. If you can see on NQ, if we go to NQ real quick, on the 1 hour, you can see that this balanced price range that we called out worked, closed above consequent encroachment. As you can see, this is pure ICT teaches right here. Closed above that 4 hour market structure shift. You can see how clean that was. And we didn't even come down to retest that market structure shift. So very, very, very strong. And I'm pretty sure on QQQ is their last level. We had fairly the same analysis. Didn't really have any fair value gaps, but we did hit an order block here on QQQ. I know some people caught the low with fractals. I personally don't trade fractals. Looking to get into it, it's very confusing right now. As you can see, we had this high targeted for pre-market, and I wanted this volume imbalance to be filled. As you can see, this gap, I said want this gap filled. As you can see, we fully clean above, and I'll talk about this price action later on. But let's go back to SPX. Let's go into what I called out today, or this morning actually. Okay. So this was good. Okay. So let's talk about this. I said at 8:54, by the way, 8:54, this was basically after, okay, so this was during office hours. I said, you know the deal, SPX held the expectation, so what I had met there. Looking for a move down into discount fair value gap. So I'm talking about this discount fair value gap on the 1 hour, but it was also marked on the 30-minute. Bearish bias for the AM session and bullish bias for the PM session. Remember that. Look at this. Let's pull up this one. If this is going to work. When does this is not going to work. Do I got to go to the 5-minute? Fuck. Fucking hate this, dude. Sorry about this. What did I say again? I said bearish in the AM session and bullish in the PM session. No, what? That can't be. That cannot be right. Bearish buys in the AM session. Bullish buys for the PM session. No. Come on. You're saying I predicted what was going to happen today? Hold on. You're telling me that this random dude I just clicked a video on YouTube predicted the market? Okay, so what the fuck's going on? Well, I'll tell you. Had more analysis here. Made a little oopsie. This was not actually a 15 market structure shift. It was just a break of structure. Still, pay attention to this. This was posted at 9:06. You can see I'm not in replay, so this is live markets. I marked out this order block. I'm pretty sure this was on the 15-minute order block. I said candle or candles will tap into this order block. Here's the discount fair value gap on the 30-minute. As you can see, I'll talk about the range. And let's see what happens. Let's go to the 15-minute just to make sure. Yeah, so 15-minute, as you can see, created that order block. Let's talk about the range real quick. I just want to make sure we understand what's going on. So on the 1 hour, I marked this range on the 1 hour. We had this swing low. And to me, the swing low is very important because this swing low created this swing high, which closed above this market structure shift right here. As you can see, this was important because of one thing. It created a range, a discount and premium range. Now, when you draw it out, I'm going to do it in colors because I know you guys are fucking colorblind here and fucking blind in general. Oh, pretty colors. Look at this. Well, what happened? Multiple things happen. First of all, if we're looking to go bullish in the PM session, I'm hoping to see some bearish price action come down into this discount array. Why? Why would I be looking to be bearish? Because if you remember on the 5-minute, when market was not open yet, we were up here. We were trading up here at 8:45, which was here, 8:40, yeah, down here. We were there, 8:50. We were here, up here, not in the discount. We were in the premium. So what did I say this? I said, I want this to be bearish for the AM session, so the morning, and then we would hit this fair value gap or discount array and then go bullish for the PM session for the rest of the day. That's exactly what happened. Predicted it. What's nice about this is I predicted this too. As you can see, pretty sure, oh God, I think it was unemployment claims or there was something with news today. I just cannot wrap my mind around. Fuck, what did we have for news today? I know there was something at 8:30. I think it was Empire State Manufacturing Index. I don't know. My Google just, okay. Yeah, oh, go ahead. Just fucking crash. What the fuck is going on? Anyways, we had news. Obviously, as you can see, it was bearish news. Came down, very strong move down. Came up, tapped into the order block, consequent encroachment. This one was not quite. I was hoping to see this move on the what's called on the oh crap, on the New York Open. But as you can see, New York Open came just 10 minutes right after. I was open for like a silver bullet, but as you can see, price on this candle did exactly what I called, and I said, candle will tap into this order block. Boop. And it came down. It came down, it came down. As you can see, I'm pretty sure I did execute on this. Oh, yeah, you can see, yep. Entered here, entered 2 more here because of this fair value gap. As you can see, sold right here. Okay. And so what happened? And remember, we have this range, right? We have this range. Discount. On the 1 hour, there was, and yes, there was a 1 hour fair value gap here, as you see. Now, the problem with this 1 hour fair value gap is the reason why I didn't like it, first of all, was because I knew that if this 1 hour fair value gap was created because of this imbalance here that pushed through, I knew that there was something bigger inside this imbalance. I knew that these wicks down here had nothing to offer because this was pre-market and this was London, like low London session. So I knew there was nothing there to offer. Absolutely nothing. I just knew that there was nothing there for us to trade into. Absolutely nothing. There was a 4 hour fair value gap all the way down here, which is how we made that low. And we tapped into that, which is fine. Really was not targeting that. All I was targeting was when we go below the 1 hour into the 30-minute, you'll notice inside this 1 hour fair value gap, there's a bigger fair value gap, the 30-minute. And you'll see this plays a pretty big play into what we're about to talk about. And this, I like this because it's deeper into the discount. And if you listen to anything I said yesterday, I said the deeper you go into discount, the more buyers there will be. the more buyers. So the moment you get here, sure, there's some buyers here, but there's way more buyers down here. See, we came all the way down here, and look at all those buyers. Oh yeah, they really fucking jerked themselves off right here. They got really fucking happy right here. They got real fucking happy. Okay? So now that you understand the range and the discount, you can see that when price came down here on this fair value gap, what did it hit? That's right. Equilibrium or what's it called? Can this not go? What's it called? Discount. So what did it do? It hit the discount. It also hit the top of that 30-minute fair value gap. Boom, came up. Knew that. Boom, 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 boom. Disrespected this order block. Why? Because we already traded into it. Delete. It respected this liquidity. As you can see, this wick was formed off the 8:30. I'm pretty sure news will work now. What do we have? Why the fuck is my background giraffes? What do we have? Thursday, unemployment claims. That's what I thought. Okay. There you go. You can see it respected the wick, came back down, and tried to take a trade on this. But as you can see, I realized that this did not react off a high time frame PD array. Didn't sweep anything. It didn't do anything. It just reacted off the consequent encroachment of this order block, or of this wick, my bad. And it just used this order block to come up. And what did it truly want? It wanted the bottom, and it wanted to sweep this 30-minute fair value gap. And as you can see, it tapped into that 4-hour imbalance all the way down here. Now, personally, I did not have this marked until I did analysis. So I'll be honest with that. I did not have this marked on my live trading, but I did have this 30-minute fair value gap marked. Now, you might have noticed in my notes, I said using lower time frame as a higher time frame. Now, if you also remember what I said just 5 minutes ago, I said I wanted to be bullish and wanted to go long in the PM session. So I was looking for a buy model inside this fair value gap. There was 3 ways you could have done this, and there was 2 mistakes you could have done. Notice how there's 3 entries you could do. The first is off this one. The second is off consequent encroachment. And the third entry is off the bottom. The first entry could be something like this. Oops. Let's delete this. Price comes in. Taps, sweeps, whatever. Market structure shift. Sweeps internal. Creates a swing low. Boom. But what happens? We just tapped into it, which means that we did not trade fully into it, nor did we come down to the consequent encroachment. Now you could do the same thing. Whoops. Okay, don't know why this is acting. Why the fuck? There we go. You could do the same thing with consequent encroachment. And then finally, you could do the same with when it fully sweeps. So, what exactly happened? What I did was I made a mistake and I entered off the consequent encroachment, and that's what happened here. As you can see on the 5-minute, it doesn't look like much, but when you see this candle rush down, you can see that if you know anything about order flow, you know when sellers and buyers are in control. As you can see here, who's in control? Sellers are 100% in control. This candle went all the way from respecting an order block to wanting to sweep this liquidity in one candle. That tells you something. Okay? Knowing that we've already tapped into it, I knew this wanted to go lower. Where was the price point? Consequent encroachment. Okay. We look at the 5-minute. As you can see, it comes up, it does all this bullshit, blah, blah, blah. Rejection off the lower time frame. As you can see, we create a swing high, boom, come down, and we hit consequent encroachment right here. Or I think this was a wick. Where was the wick? This is macro. Okay, let's go down to the 3-minute. Oh no, it looks like, oh no, never mind. This wick hits earlier. It's not this one, it's this one. So 5 minute, my bad. 5 minute comes down. You can see this wick, boom, gets bought back up. I was like, okay, this is showing bullish price action. But look where this wick is. It's not here. It's not right after the consequent encroachment. It went a little deeper. It went a lot more deeper than expected, didn't it? What does that show me? That shows me it wants to go lower. I didn't see this personally live. Just didn't pay attention. Unfortunately, we had a macro, and this macro said accumulation. This is an accumulation macro, which is very important. I should probably note some macros are getting very, very important. Another mistake is that this was PM session, but it just switched over to PM. I mean, PM is like 12, but the real PM session starts at like 1-ish something. That's when the real PM session starts. 12 is kind of in the middle. It's not AM, it's not PM. It's just kind of a dead zone. You don't really trade between that. Okay, it's lunchtime. It's when everyone kind of just goes away. So this was a little mistake I did. As you can see, I had the live setup set here. 3 minute, nothing. What do you go? You go to the 1 minute. What happens on the 1 minute? I'm going to go over this very quick because I got other stuff to talk about. Swing low gets created. Swing low. What happens before the swing low that sweeps this lower time frame PD array? Swing high. Market structure shift happens off this move up. Cool. Range. Where's the range? Make it colorful. Boom. 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 Discount. What's a discount PD array on the 1 minute? Fair value gap. OTE. Okay. You have that mark now. Draw the OTE, enter off the OTE, get stopped out. Fucking dumbass. Why? Wants to go lower. So you go lower. It goes lower after 12, after this accumulation macro. What's a good thing? It's accumulating price. That means that there's buyers and sellers right here. What is it going to do? It's accumulating buyers. And what are those buyers going to have their stop loss at? Right here, under this fair value gap or even lower. And guess what we're going to do? We're going to manipulate the price down, take out all those buyers, and get the banks into the market. Yeah. Now, this is where it's important because, as you can see, this discount 30-minute fair value gap was a 30-minute fair value gap and 1 hour fair value gap. It was not a daily fair value gap. It was not a weekly nor monthly PD array. So this was a lower time frame PD array. Now, I've noticed you can still use them, but you have to be extremely careful of when to use them, and you have to be extremely careful of the price action. As you can see here, the OTE worked. We did not get stopped out until here. So we did have our run up. We could have hit our TP here if we had a TP. The model works. What doesn't work is the model in the wrong order flow. As you can see here, yes, the order flow here was bullish, but it wasn't. All it was doing was chopping around this zone. It was accumulating. And we didn't realize this because what we really wanted to target was fully sweep this discount fair value gap. As you can see here, this might be, like, to the naked eye, this might be a little hard to spot on the 1 minute. You might be like, how the fuck did he even catch this trade? And I'll show you exactly how I did it. Again, I didn't have this 4 hour marked, so we're just gonna delete that. Never knew that existed. Didn't apply to the trading, so why should I have in the video? Didn't have it. Here, you can obviously tell with just price action, you can see it's chop. Like if you have experience, you can tell this is chop. It's accumulating. Now, it's probably power 3, accumulation, manipulation, distribution. That's fine. Or, accumulation, manipulation, distribution. That's also fine. So, what happens? We make, obviously I'm looking probably, oh my God, dude. I'm looking at the 5 minute. It looks like the wicks, they're kind of getting bought off, sold off. And you can see it reacts off some kind of level. Again, I didn't have this level. We're not going to make some random level while live trading. That's probably the worst thing you could do. But you can see this wicks are not selling as much as they used to. So you can understand now that, okay, well, you know, equal highs, equal lows, something's going on here. Okay, so you go down to a lower time frame, 3 minute, see what's going on. Oh, would you look at that? Swing high here, swing low. It's equal lows, but whatever's this, you know, it's the same low. Swing low, swing high. Cool. Standard deviation. Standard deviation tells us a lot of stuff. Wow. Were we expecting a 5.3 move? Absolutely not. But I definitely can tell you that the -4 was lined up perfectly with this buy side liquidity. That this -3.5 was almost perfectly lined up, and this range was perfectly lined up with this buy side liquidity. That this -2.5 and -2.5 was lined up perfectly with this fair value gap, this bearish fair value gap that we could be targeting for a reversal. Just saying. Standard deviation looks good to me. Looks like it can play out. So what do? There could be a market structure shift on the 3 minute. Let's mark it out. Okay, 3 minute on the, or 1 minute. Let's go on the 1 minute. Let's see if we can take a range. Let's draw a range real quick. Make it nice and pretty. Swing low to the current, where was it? The swing high here, I think. Was it? Wait, no, where did I draw the OT from? Oh yeah, it was this. Oops, hold on. Okay, so I'm now realizing that I've made just a little mistake, but I will own it up. When I was live trading, when was this? I'm pretty sure this was before physics. Okay, yeah, so I was in class. So I was a little rushed, I'm not gonna lie. But I don't know how, but I saw this on a lower time frame, and I'm now realizing that there was no market structure shift on the 1 minute, and there was no reason to draw the OT from this swing low to the swing high, creating this range. There was no reason, but I still did it, and you can see that, you know, the retracement model still works. Just to, you know, highlight this off, swing low to that swing high. Now, this obviously did not take out this market structure shift on the 1 minute. Most definitely did not. It only took it out on this candle here, as you can see. But if you were to be realistic here, if it did take it out here and you were waiting for a retracement or a swing high, you can see that it never came. Never came. So I just want to point out that I got in earlier, and I got in before my model was made. And you can see that this model doesn't even exist. It should not exist here. Because there's no, even if I go back to the 3 minute where we spotted that market structure shift where you might want to see the OT and your entry be taken, you can see that it's just chopping around. And you can see, to be honest, that there's no retracement back off this market structure shift. Absolutely none. So I think that I saw the range on just the 1 minute off this reaction, and I saw the proportion off of this range, and you can see the wicks were just too good. I mean, the body closures, right? This body closes right on the OT. This one trades down to the OT. That it doesn't mean go lower. Kind of 1 tick, half a tick, not even. But it closes right above the OT. In this one, candle, boom, OT, all the way back up. And I'm pretty sure this was in discount if I marked it wrong. Yeah. Okay. So yes, low mistake. It looks like I got in early before my model was even created, but it just tells you, and this is I think this is a lesson in itself. because I've traded this model so many times, I know what the price action around this model looks like. Isn't that a fair assumption? Because I've traded this model so many times, I know what comes before the move happens. I know what the model is trying to do when it's trying to form. I know what the candles look like around the OTE when there's a repulsion off. I know this stuff because I've experienced it. I've seen it. So would it be fair to say that when this market structure shift is created, I'm looking for a swing low that creates that high that fully takes it out? I'm looking on the 1 minute because it's probably the most accurate. And I'm live trading and I'm live doing this range here. And I notice when the swing low gets created here, you have this imbalance on the 1 minute. You draw the OT and you can see it perfectly. Now, could you enter and be wrong here? Yes. But that's why my stop is literally right under this high or this low. Because if this OT is not very strong. It's not very big. This OT itself here, it's literally a whole candle. I mean, price can just boop, boop, and take me out in just like that. Boom. Just all it needs is one little tiny candle. That's all it needs. So very small OT. Like I said, this low, if it breaks this low, I'm out. And this would be a tiny loss. So yes, mistakes happen. This was kind of like what's called like a good mistake. Like it's a mistake that I saw in the video that I entered early because I was in a rush. But it's also a good thing because I've seen it happen so many times that I was able to mark the model without the model actually forming before the model formed when I saw the model. Like, you know what I mean? I could see it happening even though it wasn't there. Because guess what? You know what? And if you're still here, you're very lucky. The main thing of this model, the entire purpose of this model and the whole driven purpose of this is retracements. That's what we're trading here. Retracements. Look at the big picture. We're talking about swing high, swing low, swing low, swing highs. What does that form? That creates a range. In that range, there's what? Go ahead, say it. Premium and discount areas. In those premium and discount, there are PD arrays, arrangements of what? Of what? Of displacement. And what does price do every time it creates a swing low from a swing low? It comes back into a discount array to go back and target premium liquidity. Vice versa. We create a swing high. That creates a swing low. We create that range. Price is going to retrace into a premium array to target sell side liquidity. There you go. That's your ideology. And all you got to do now is do that in the small time frames to catch entries. And if you can understand how the big time frames are identical to the small time frames, then you've got it, my friend. See this specific price action that happened here, and I'm marking like big red here. See this? What's highlighted in red? It goes up, tiny range, retraces. Guess what? Guess what, my friend? Isn't that exactly what happened here on the daily? Range, retracement into the range. Back up. Range, retracement into the range. Back up. Thank you for watching.